man on the screen with a big smile as always. And this time he's going to smile more because Vedant Fashion and Campus, they both are at an all-time high. Good call. You still own them? You've sold them?
Thank you, Nikhil, for calling us, for inviting me on the show, and good morning to you and your team and your viewers as well. Yeah, we still on them. In fact, if I remember right, we last time we met, I told you we had raised a lot of cash. In fact, a peak of 25% in our PMS and 29% in our AIF, which we started deploying sometime in May onwards, and by probably July we were like totally done with our cash deployment. So few of these names are these that we picked up and started averaging to our portfolio, and yeah, they've done fairly well. We're still sticking on to them, no doubt about that.
Only one question for you. Which is the new Vedant Fashions, or will Vedant Fashions continue to be the new Vedant Fashions?
Well, we also looking for that name. so basically, I mean, the theme that we adopted was affordable luxury, or aspirational luxury, and so one of these names was Vedant. One of the recent entries that we've done to our portfolio is an online food tech company. So basically, Samir would have told you that name anyway, so I don't need to tell you that. So I think that is looking a bit better. I mean, recent correction helped us in identify that name as such. And
Samir has not come on the show for a while, so why don't you tell me the name?
Okay, so it's Zomato, because it's Zomato.
Really?
And we picked up the name.
Really? I mean,
yeah,
what about profit? What about the whole concept of cash flow?
Right.
Helios always looks at cash flow rather than projections.
No, but you also have to look at potential, Nikhil. So basically, the potential out there is huge. So in fact, immediately after the call, when the management came on the call and said that we're looking at, we actually had a EBITDA break even on the delivery business. That was very exciting because that wasn't expected to be. And in fact, the contribution levels are expected to go up. In fact, they've done that in the last 3 quarters. They had a peak of 7% contribution margin, which came down to 2.5%. I mean, the recent one was around 2.5%. So that can only grow from here. And that happens, obviously, Blinkit is a big joker in the pack. But I'm sure with the cash reserves of 12,000 crores that they have in their books, that will be more than enough to take care of that. So our call was more on the delivery business. And I mean, looking at the millennials and Generation Z in our crowd today, they can't do without ordering from outside. In fact, we thought that probably, that it was a flash in the pan initially when COVID led to such huge amount of volumes for these guys, but that continued onwards. So it's obvious that people have got used to it and they want to continue with this as such, as inconvenience basis as such. So we are very comfortable at the given levels that it is today. So we'll stick on to that name.
Dinshaw, but the fact that you, let's say, invested into Zomato, you own Vedant Fashions, there is exposure to Campus, but there's also an exposure to ITC. So what is the market template which you're working with? Because I'm just going to quantify this question for the benefit of our viewers, Dinshaw, because there is a time when value does well. There is a time when high P does well. There is a time when energy and dividend investing has done well.
Agreed.
So isn't there a contradiction if you bought into Zomato, which is high in terms of growth, or Vedant, which is high in terms of PE, and ITC, which is high in terms of comfort and dividend yield?
Right. So, okay, there's always 2 portions in a portfolio that one has to manage, right? One portion which we call as high confidence and reasonable return. Now, that's where your ITC fits in, right? And that is your stable part of the portfolio. That is which is like probably low beta or stable beta and stuff like that. And the other one, which we call as reasonable confidence and high returns. That is where the other 3 fit in. This is where you try to discover new names that you try. And by the way, the weightages are very different in both the parts of the portfolio. I mean, the high confidence and reasonable return portfolio will have concentrated names. So there'll be 4.5% to 5% kind of weight. While the other portion of the portfolio will be this much. Having said that, let's understand one thing here. So basically, what are we looking at? In India, probably it'll be the base to the largest young population in the world, probably by the middle of this decade. And what does appeal to these guys? So this is what we try to identify, and this is what we try to play along as such. So that's why we identify these names, and we are sticking on to them as going ahead this way.
Good morning. So, is it only Zomato that you've entered at, at the price point when it became attractive around 40 rupees? Because the fact is, this earning season, from every new age company, it's like they're listing the markets, they've come out with a calendar. Zomato's done it over the weekend. Paytm came out with his calendar for profitability. Nykaa was already in the green, but is talking more about a renewed focus on the bottom line. Policy Bazaar has also talked about profitability.
So, by the way, we didn't buy it at 40. We wish we had. We bought it in the 50s. So, in fact, in our PMS, because we had to raise cash at some opportunity time, it was in 60. So, we're somewhere there only in that. In the AIF, we bought it in the 50s, per se, 52 or 53 or so. Such. But frankly, I mean, you took these names. So, if you go by the beauty portal kind of business, there's a lot of competition there, right? In the food delivery business, globally, there are two players. In every market, you look at any other market, there are only two players. In fact, the number one player is always by far the number one. In India, it's the only exception where both of them are more or less around. So Zomato claims to be number one and Swiggy also claims to be number one. So let's not get into that debate there. But the fact is, it's going to be a two-player market going ahead. There's no place for a third player. You saw that. You saw an Uber coming out with that and finally getting sold. You saw an Ola coming out and finally getting sold. So there's no scope for a third player here. It's a two-player market. And can you imagine appealing to a base of 300, 350 million odd consumers? I mean, this is actual consumers. This is not the population of the country, right? This is the actual consumer base, and that this two-player market doing that. So it's going to be a very phenomenal going forward with the returns that you'll see here. And secondly, you talked about one of the fintech companies. I mean, if you looked at the list of IPOs, every third company is a fintech company which is coming out in IPO. So there's enough supply in the market. Even the case of the beauty portal that you talked about, the fact is that they didn't see. So basically, when you ask the management there, how will you overcome a competition from Amazon or say from a Tata's or from a Reliance and stuff like that? The answer is very simple, that we've done this for a while and will continue to do this going ahead. But the fact is that they didn't see these kind of market caps earlier, right? Amazon didn't see this huge a market cap or a potential in this business. So obviously they'll up their game, they'll improve it at some point in time, and there'll be enough competition there also as such, and from biggies, not from startups. So that's why so basically, we need stories which have got a long runway for not only to grow along with their earnings, but also to re-rate as and when the consistency comes in. I think Zomato offers that on a larger scale than the rest of the players in the pack.
You've in the past also stayed away from the commodity sector, or what you and Samir call to be the billion-dollar consumer stories. So having said that, we've talked about Vedant, we've talked about why the entry into Zomato. In the past, we've of course talked about PVR, you've given us names like Lemon Tree. But we're now talking at a time as well when the markets were about to breach the all-time high. Now the conversation is, are the markets getting too heated too fast? And as the FIIs stage a comeback, will banks benefit the most? Would love to get your views on it. You, of course, have a large exposure when it comes to the private sector lenders. How are you looking at that space? And, are you accumulating? What's the strategy?
So, basically, I mean, talking about the markets per se, we also, I mean, the mid-teen kind of rally that one has seen from the bottoms of June is fairly discomforting. We would also hope that, the market takes a breather. I mean, already it is doing that last 2 days, but the breather we were feeling was going to be a flatline kind of breather, not like corrections of 1-2% or such. So we keeping our fingers crossed that the breather will be in the terms of flatlining. I mean, this is the short term, right? In the medium term to long term, India's story is basically a story that cannot be ignored by any FPIs who are looking at emerging markets. Yeah, because you've got, I mean, probably the fastest growing GDP in the world. I don't want to repeat this, right? I mean, the manufacturing base coming up, which is China plus one play playing out, and probably the consumption base, which earlier was mainly my generation kind of people, and now it's like the millennials and the Generation Z, which are aggressive spenders, right? So that's one. Secondly, we're not too far away from our inflation also. I think India is probably the first one to peak out on inflation per se. Maybe there's some more upsides left here, but the fact is that the real interest rates are not too far away from the zero. Most of the markets are still in negative territory in terms of real interest rates, but they're in the mid single digits to high single digits kind of the thing. We are at 1.5% odd negative as well. So we have a certain amount of comfort there also that obviously our RBI would be looking at not aggressive rates anymore going forward if crude behaves itself. That is one big caveat here. So that's another one. And frankly, look at the quarterly results. You talked about lenders. I think the biggest upside that came in the earnings was from the lenders per se, because nobody expected the NIMs to appreciate so sharply in one quarter alone as well. So that continues to be our comfort level here. We continue to be with our private sector players and consumer-facing NBFCs.
Dinshaw, I'm going through some of your notes and you're cautious on IT. We as well were noticing this trend and flagging off the concern that, there is a variable salary issue irrespective of the cash kitty that most of these large IT heavyweights are sitting in on. But why are you cautious on IT?
So, Aisha, basically two reasons which was there. So if say the developed markets go through a recession, and it's not a short-term recession, which we're hoping for. But I believe that the market is playing out today a short-term recession in the developed markets. A 2-quarter kind of a downturn in the economy as such. If it's a slightly longer one, normally the first ones to take a hit are discretionary spends of all these corporates based in the developed world. And obviously the discretionary spends are esoteric, you're talking about ER&D services and you're talking about new ventures being launched. So that all will be impacting specifically the mid-cap and small-cap space in the IT space as such, because they are more or less into these small ticket kind of discretionary spends that they undertake. They do services for those as such. And secondly, what happens is there's a consolidation which straight away kicks in. They would rather get a larger vendor who can ensure a better supply or who can ensure a better savings in cost. And obviously, when that consolidation happens, you'll see the large caps, the small caps and mid caps taking a hit in the business to that extent. And thirdly, it was the supply side. Already you could see the stress, right, in the quarter numbers which came out. Top line was not a question; it was more of a margin which was always was being questioned as such. And most of the IT companies, they cut their margin guidance down to that extent also, to be fair to them. But the fact is that is not improving in a rush. And one article which I read over the weekend was that at least now the HR companies are not even negotiating with the IT guys who come with counter offers. So that is one healthy sign, but it's got a long way to play out, right? So I think mainly the cut in demand will see the supply also improving to that extent. So let's see how that works out. Till then, if we get new money, obviously we won't be, whatever positions we have, we are holding on to those, and we won't be, we probably neutral to slightly underweight on IT in our portfolio today, and we'll probably continue to do that.
Sure, I'm going to put a graphic out, and maybe your reaction is something which I would look forward to, and this is just a reaction. If you invested 6 lakh rupees in Adani group of companies, 6 lakh rupees, today it's worth 70 lakh rupees. Now as an investor, it's like a dream jackpot, right? 10x across the board now. Why is I'm trying to understand. What is that everybody has missed, and why these stocks have done this massive bungee jump? So not a bungee jump, but a massive leap, so to speak.
So by the way, Nikunj, I heard that data point just before you took me on the show. You had asked somebody else, and I was hoping you won't ask me this. So I would rather skip. Frankly, we don't have any coverage on Adani Group per se, and we would rather not comment on something that we're not owning or don't have any view on. So I'll rather skip this question. Sorry about that.
Nikunj, whoever we ask, they say we don't have any view on Adani names. We don't buy these stocks, but someone is buying and someone is making money. Sure. I wonder who that is.
Well, look at the shareholding pattern.
Yeah.
these are stocks which are still largely owned by a promoter group. You don't have too much of free float. You don't have too much of institutional participation. There are limited number of HNI investors who've really participated in them. So is this a story of sour grapes? In hindsight, we will say, okay, this was the biggest turn which happened post-COVID to a corporate group which is taking risk, which is expanding their balance sheet, which got benefit largely because of the energy prices, which got benefit because they were able to create infrastructure, build infrastructure, and because of this whole debt challenge, nobody looked at them. I mean, the debt size of that, nobody looked at them. So could this be the
biggest miss of
biggest miss? You don't know, Aisha. You don't know. I mean, only time that in hindsight we can figure out. But all I'm saying is that if you bought into Adani group of stocks at any point in time in last 2 years, good day, bad day, the price action has been nothing short of unreal.
You could have cut all your debt that you're sitting
Exactly.
on. Yeah.
All right, Dinshaw, any closing comments? Then we'll wrap.
No, I'm fine, Nitin. Thanks a ton. But by the way, one more thing that I wanted to highlight was that, I mean, as I said earlier, that probably it's slightly unnerving that such a huge run has happened in such a short time. But I would rather believe that, I mean, rather we feel that India's got a long way to play out. And I think this is the right opportunity for stock pickers to go and analyze their names and pick them up or average them out as such. So stick on. I mean, don't get too carried away by these swings as such. So leave it there.
Well, Dinshaw, you're smiling like this at the peak of the pessimism. Now the smile should obviously amplify and be slightly bigger now that markets are nearing an all-time high.
Thank you. In fact, Nikunj, I was hoping you won't ask me about price of mangoes the way you asked me the last time around. That took me.
The season is over. The season is over. So next time when we'll talk, we shall talk about a lot of other interesting things. And we shall talk about Ganpati celebrations and a lot of things. By the way, did you participate in the Dahi Handi last weekend?
Oh yeah, I was one of the guys breaking the handi on top. No, I didn't.
55 lakh rupees was a pot size in Mumbai. Talk about a jackpot and a multi-bagger. Right, really appreciate your time. Thank you for joining us.